Hello everyone, and welcome to today's webinar. Today we have Stacy Dose, our Strategic Alliance Manager from Avalara, joining us to present on Economic Nexus and the Future of Sales Tax, the impact of the South Dakota and Wayfair Incorporated ruling. She brings a unique background of working with users just like you as a consultant and a vendor. I just want to let you know that all of our webinars are recorded, so this will be available by the end of the week for you to review again, or if you'd like to share it with anyone, it will be available on our website at innovia.com. And we do ask that if you have any questions, please don't hesitate to type them into the questions box, and we will get them called out toward the end of our webinar during our Q&A time. So now I'll turn it over to Stacy, and she'll kick off our presentation.
Wonderful, thank you, Angie, and thank you, the rest of you attendees, for taking some time out of your day to join us to talk about Economic Nexus and the South Dakota v. Wayfair ruling. Hopefully at least all of you are a little bit familiar with what the ruling is, and after today you can have a little bit more insight, and if we have more questions at the end, we can dig deeper either individually or as a group. Just one quick disclaimer, I just want to note that today's presentation is just really an overview of the ruling, and that it's not a substitute for legal advice or tax advisor advice. For example, I am not a tax professional. I'm here to kind of give you the basics and an understanding. We'll talk about where, when, and how you might engage with a tax professional for additional advice. But I just kind of want to note that up in the beginning, that I am not by any means a tax expert. So let's talk for a second about what we're going to cover today. So we'll cover the basics of the South Dakota versus Wayfair ruling, what that means, when it took place, and kind of what it may mean to you. We're going to talk about what Economic Nexus is, because that's really kind of at the heart of the Wayfair ruling. And then what you should do as a customer, what this means to your business and what you might want to think about doing, and then how automating your sales tax compliance can help with that. So hopefully this will all roll together. There will be time for questions at the end, and there is room for you to put them on the chat again, as Angie mentioned. So let's start off and talk about what is South Dakota v. Wayfair. So basically, it's a ruling that took place by the Supreme Court. It was a ruling that came down on June 21st of this year that really overturned a prior ruling, the Quill versus North Dakota ruling, which had previously said that in order for a company to have Nexus in a state, they had to have a physical presence. So the standard previously in most states for when you were obligated to collect and remit sales tax was a physical presence. Having a brick and mortar building in the state gave you Nexus. So on June 21st, the Supreme Court has been kind of going back and forth, as the court system has, and they came down and said, we're going to overturn that original ruling because there is other things now that could cause companies to have Nexus in a state. So they've kind of created this idea of economic nexus. And so South Dakota is granted the authority to impose sales tax obligations on out-of-state resellers or out-of-state sellers. So that's kind of the basics and the background on how this came about. So what does this mean and who is affected? This is not just online sellers. This is really anybody selling remotely into another state. So if you're taking phone orders or fax orders or anything like that, and you're selling into another state, in this case, particularly into South Dakota, you could have an economic nexus in that state. So South Dakota has said that their nexus thresholds, and we'll talk a little bit more about this in a minute, are $100,000 or 200 transactions within their state. So they're saying any remote seller who's selling into the state of North Dakota that meets one or the other of those thresholds is now a tax collector of the state of South Dakota, and you have Nexus, and you're required to register in that state, collect sales tax, and remit to the state. And their information went effective actually today, so this is very timely. So for the state of South Dakota, these rulings on their economic nexus and their levels is effective today on November 1st. So we'll talk about some more about some of the other state impacts in a minute, but just kind of going on a little bit more about the ruling, here are some of the details. So for people who are already registered in South Dakota, there really is no impact, right? So you already were collecting sales tax in that state. Nothing is changing. You may or may not have registered based on a physical presence or a remote employee or something along that line. So nothing really changes for those of you that were already collecting in the state of South Dakota. And as I mentioned, it is not only online transactions, it's really anybody selling remotely into a state. And as I mentioned, that can be any means, whether it's phone, fax, or catalog sales, anything like that could give you Nexus in that state. And does it change anything with non-taxable transactions? And the general thing there is no. Whatever was taxable in the state of South Dakota is still the same, at least with regard to this ruling. Now, if there have been other tax law changes, that may be different. But with regard to this ruling, the taxation of products has not changed. It's really just the thresholds at which you are required to now register and remit in that state. So again, it really brought about this idea of economic nexus. So having an economic presence in a state. So just to expand on that a little bit, like I said in the beginning, it was really talking about brick and mortar buildings, a physical presence, the mom and pop shops in your local city or state. Then the nexus kind of went into, do you have remote employees? And now this ruling really brings about the idea of nexus, economic nexus, and you having an economic presence in that state. So just wanted to kind of reiterate that. I won't read all of this, but like it says, it does not change what is tax exempt and some of those things. So let's talk about how this affects some of the other states, because we've talked really about South Dakota, but other states are quickly joining the ranks of wanting to get on board with this. And as a matter of fact, some states already had economic thresholds on their books prior to this ruling. It just now, with the Supreme Court coming down and ruling it, there really is no way to kind of fight it. Now it really has come through the Supreme Court system and said physical or economic nexus is now really a thing. So this map is constantly changing. You'll see that this is about a month old. It's as of October 2nd. We're putting these out on a pretty regular basis, but you'll see the states in blue are the states that right now have economic nexus rules on their books. And on the right-hand side, you can see some of the things. Some of them started in July, September, October, November, December, and even into next year. As far as when they're actually taking those effective, all of these states likely have different thresholds. So they can be a transaction volume, $100,000, excuse me, 200 transactions or 100 transactions, or they can be a revenue number. They can be $100,000 or $200,000, or they can be an and statements. Some of them may be $100,000 in sales and 200 transactions. So the problem and the bad news for companies trying to figure out what this means to them is every state is different. We do have some resources that I'll talk about later in the presentation that you can use to kind of look at what these different states are putting on the books and what their thresholds are. But you can see right now, I think last I heard it was about 26 or 27 states now have economic nexus rulings on their books. So for anybody who previously was collecting in 1 or 2 states and you're selling into other states, this could have a really large impact. Now, a couple of other things that you're seeing on this slide. I do like to point out the little yellow diamond. That is states that have cookie or software nexus. What that means is if your website leaves cookies on somebody's computer in a state, any state with that yellow diamond means that by your website leaving cookies or having cookies, you now could have nexus in that state. So Iowa, of course, you can see the yellow diamond in the middle. But if you look at some of the circles representing the far northeast, Rhode Island, Massachusetts, I mean, some of those, have those cookie nexus as well. So there are other things around nexus that I'll dig in deeper into, but this slide is something that you can use as a resource. And again, I'll show you how to get this stuff later. So let's talk a little bit more about economic nexus and what this is. We've kind of talked about it. I'll kind of let you read this. I won't go over in detail. I won't read all of this word for word for you. But it is a tax collection obligation imposed on a seller in a state based on economic transactions in that state. So it's basically saying, again, as I mentioned earlier, once you've met certain thresholds, you now have you are now a required tax collector of the state to register, collect and remit sales tax in that state. So that's kind of what economic nexus is. So I'll give you a second if you want to read this. But again, the old idea of needing to have a brick and mortar building in a state has kind of been put to bed. It still exists. It's just not the only nexus test there is. Now, some of what brought this about, and because I like to talk about kind of why this is such a big deal, is if you look mainly on the right-hand side of this slide, 47% of state revenue has historically come from transactional sales tax. So every state was really really banking largely on having revenue come in from transactional sales tax. So if you think about the day when people were shopping locally, they were going down to the mom and pop shop, buying their toothpaste, at a local store. That was great. They were paying their tax to their jurisdiction, and it was going to their state, and everything was great. But when it became so easy to do all these transactions on Amazon or eBay or Etsy, or even if or Wayfair, for example, the states were no longer getting their share, and so states were losing about $13 billion because of e-commerce sales. And that was a large hit. So that's why some of these states, especially South Dakota, came up and said, listen, as a small state, we can't afford that kind of loss. We really need to be able to regain that, and you're selling to our consumers. So that's kind of a little bit of a background on why this is so important and what it really means to states. The other thing that's important to know about these numbers and why these are important is what states are doing about it. There are some states, I think California at one time hired 100 auditors. Idaho, on a part-time basis, I think added like 40, and I think later they ended up hiring all of them. Auditors, their job is to bring revenue into the state. They're trying to find companies that they can audit, and there's a lot of ways that they will and can do that. They maybe will audit one of your customers and see that you didn't charge sales tax, and then they'll come and audit you next, for example. So these numbers are actually very impactful in understanding why this is important and why states keep kind of adding and making more complex tax legislation. But to lead up on that and to talk about economic nexus, I do like to point out that these are not the only two types of nexus. So historically, it was kind of physical property, having a brick and mortar building, and now we've talked about economic nexus. But there are other things that can trigger you to have nexus in a given state. This is a sampling of some of them. If you attend trade shows in a state or send employees to a trade show, you could have nexus in that state. If you have hosted data centers, you could have nexus in that state. Hawaii, for example, if you solicit sales for more than 2 days in the year, you have nexus in the state of Hawaii. So the thing that's important to understand here is that many of you are busy professionals. You're working on your business's core competency and trying to understand and stay on top of what is going to cause you to have nexus in a state and what that would mean if you don't catch it can be really cumbersome and really hard for you because these things are changing. The idea of affiliate nexus. There is a story, I won't tell the whole story, but about how the Boy Scouts of America brought down Amazon by having an affiliate banner on their website. And the state of New York said, you're an affiliate, and now you are required to remit tax in the state of New York. So there's a lot of different gotchas here, the cookies and things like that you need to know that could give you nexus in a given state. So this is bigger than just economic nexus as well, the whole idea of sales tax. So as a company, let's talk about what you should do. What are the things that you should start doing if you haven't already? So, the first thing that we put on here is don't panic and kind of get yourself educated, which is what you're doing by attending this. And I'm sure you've gotten things from maybe your CPA or other things, but really it's about understanding what this means to your business. Again, this ruling came down in June, but remember, not all of these things were effective right away. Not all of the states have the economic nexus legislation, and you may not meet those thresholds in a lot of those states. So the whole thing is really not to panic and to get educated. Certainly contacting your SALT, which is sales and local tax or CPA firm, or your tax advisor to get additional information can help. If you don't have one, a trusted advisor that can help you with that, we do have tax advisory services here at Avalara, but a couple of things that they can offer. The first and foremost, really a great offering for you is a nexus study. Again, you can ask your local CPA firm if they're comfortable doing a nationwide nexus study, or maybe only a couple states that you're concerned in. Or again, we have advisory services, but a nexus study will gather information about your business, how you do business, where you transact, how you transact. And it's not just about economics, it's about some of those other things too, affiliates and trade shows and third-party carriers. The state of Washington, if you use a third-party carrier, you have nexus in the state of Washington, for example. A nexus study will kind of help to understand, and they'll come back with a report to you saying, hey, it looks like you probably have nexus in 17 states, and you're right now collecting in 2. So that's a worst case scenario. It may come back and say, hey, you're doing everything great, but that's one study you can do. Another thing that these people can do is if you find out that maybe you should have been collecting in a state for a period of time and you haven't been, maybe you had Nexus for some other reason, these agencies can do what's called a VDA, a voluntary disclosure for you. And that would be going to the state anonymously and saying, hey, listen, we have a customer that, you know, realized that they should have paid tax to you for the last 3 years and they haven't. They want to get current. They want to see if you'll waive any fines and penalties, and they will also cut off the audit period, because auditors can look back, but if a voluntary disclosure is done and agreed upon by the state, they cannot look back on that audit period. So just a couple of things, but these are really good first steps for you to kind of look at and see what is your exposure, where do you have Nexus, and how worried should you be versus what you're doing. A couple of other things, we do have some additional guides for you. I know this is a really long link. If you just Google Avalara and Wayfair, for example, you'll likely come to some of this. But there are some things here you can look at. There is an FAQ guide, some videos. I like to point out the sheet in the middle, and I realize it's very, very hard to see. It's not really intended for you to kind of digest all right now. The slide right here is showing that this is as of October or August 5th, I think. But we're updating this on a regular basis. And what this is telling you is this is telling you every state. So the state is the left-hand column. The effective date is the next one, saying if they have economic nexus, when it's effective. And then the next one is the threshold. So what the revenue and or transaction volume is for those states. And then there's some additional information in the fourth column. So this is a really good guide to start looking at and seeing, you know, maybe you want to run a report on all of your revenue by state for 2017 and sort it by state, excuse me, and kind of take a look at these thresholds and see how you're doing, or you could even do it year to date so far. But these are some resources, and I highly recommend using them if you have questions. So let's obviously talk a little bit about automating sales tax and how this helps and kind of where we come into this whole piece of the pie. And one of the things that I really like to talk about when it comes to sales tax compliance and automation is that I like to stress the word compliance. This is not just about rates. There's really a lot that has to do with compliance. So that's what I want to talk about here is why compliance is so important and what the risks are to you. So first, a little bit of fun stuff. I have a slide, I don't know if it made it into this deck, that I think 69% of accounting and business professionals said that sales tax is the least favorite part or the most complicated part of their job. So there's some studies that were done here. The Aberdeen Research Study and the Wakefield Research Group did a couple of studies to come up with these numbers. And they say the yearly employee cost of compliance is somewhere between 67 and 400,000. That's a really big range. It's based on small to medium businesses. So even if you take the very low end, $67,000, that is your employee cost for the time that they're using to do sales tax related activities, researching rates, getting ready for audits, talking to auditors, maintaining their rates in the system, some of that stuff. So with that cost, most companies are spending at least $67,000 on tax compliance. And having said that, 75% of them feel like auditors are likely to find a mistake. So that's a really high price to pay when your risk is still so high, because it's very, very, it's a very high risk. And if you do have an audit and if they find mistakes, that's all out of pocket to you. So that's all in addition to the $67,000 or whatever your all up cost is. So I want to talk a little bit about compliance and why this is so important, because, tax calculations or rates are what people think of when they think of sales tax. They look at their receipt and they see what that rate is on the bottom of the receipt, but it's really so much bigger than that. There are so many other things that have to do with making sure that you as a company are compliant. So the first of those is Nexus. It's making sure that that as you go into new states, that you know that and that you're prepared for that. It's product taxability. What products are taxable in each state? How much is the tax? Or is there a difference between product A and product B? So, some little things like a whole bagel versus a sliced bagel in New York. There's different product taxability rules in New York for that. Jurisdictional assignments. What rate am I charging based on that specific address? Every state and every location does not have the same tax rate. Managing exemption certificates. I'll talk more about that in a little bit, but That's an important part to being compliant. If you are not required to collect sales tax, you are required to show why, and that has to do with exemption certificates. State and local tax prep, getting all the information you need to file your returns, doing them in a timely manner, keeping your filing calendar up to date. That's all part of tax compliance, making sure you're doing all of that and doing it properly and timely. And then, of course, audit readiness. If and when you have an auditor come in, are you prepared for that? Is it going to be easy for you to find the information that you need? So I do want to talk a little bit about each of these and about kind of how our solutions at Avalara can help you address these, and we'll go through this kind of quickly. But the first one is Nexus. I mean, it's the onus is really on you as a company to understand where you have Nexus. There are people and professionals, as I mentioned, your CPA firm or our tax advisory services that can help you with that. But you have to know as a company where you have Nexus, but you have to know when to turn it on. Once you know that, in our system, it's a one click. You just basically say, now I want to apply all of my rules that I previously had in Illinois. I need to now apply them in Indiana, for example. So it's really as easy as one click in our system when you have Nexus in another state. Product taxability, all of that stuff is maintained in our system. We manage all of the rates and the rules. So you guys, as a company, do not have to worry about what's changing in the jurisdiction. What's the difference between a whole bagel and a sliced bagel? What's the difference between a Kit Kat and a Reese's? You won't have to worry about any of that. All of those product rules are built into our system and updated and maintained on an ongoing basis. Jurisdiction assignments is really huge because a lot of companies and a lot of ERCP systems are using zip codes, and zip codes are meant to be used by the U.S. Postal Service. They are not taxing jurisdictions. And so there's a lot of crossover. What we do with Avalara is we get a rooftop location. We do a latitude and longitude to make sure that we're pulling the exact rate for that exact address. And as part of that, we do an address validation in our system as well. So we make sure first that we have the right address, and then we do the longitude to make sure that you get the exact accurate rate within that address. Exemption certificates. We do have a way to automate exemption certificate management. You can actually send a request to a customer to fill one out online. They can return it, and it's all stored in our system. That can also integrate with our AvaTax piece, which I'll talk about, to tell when you're doing a transaction whether or not a customer is exempt. Because again, if you are audited, you are required to show that you're either collecting tax or that you don't have to because you have an exemption certificate. State and local tax filing and prep. We do have a service that manages filing of returns. We can provide you with the information that you can validate all of the numbers against your ledger. You can approve that, and we'll go ahead and we'll prepare and file all of those returns in every jurisdiction. We'll manage the calendars as far as when you have to file. We'll manage the tax notices. So if you're filing changes, if you have to do a prepayment, or if they're moving you from annually to quarterly, we can handle all of that stuff for you as well in terms of the state and local filing. And then finally, audit readiness. Just the fact that all of this stuff is in one place and you have a portal is going to make audit readiness so much easier. If you have your exemption certificates and your tax rates and the transaction history all in one portal, it's all in one easy place. So when an auditor comes in, they can easily get all the information they need without people having to scurry and run everywhere. We've got great reporting. You can even give auditors restricted access to the portal for a time frame and even their state, and they can go get their own exemption certificates, for example. So there's a lot of really good pieces to doing that. Now, I've talked about kind of some of these pieces and some of these solutions as a whole, so I want to give you a quick tour of our solution. And some of you on the call may already know this. But Avalara itself is, the core piece is our AvaTax. That's our tax calculation tool. That is a cloud-based system. All of our stuff sits up in the cloud. And we're constantly working with state and local governments to get rates and boundaries and rules and any changes that are taking place with current legislation. So anytime new legislation comes down where a new rate has been added or changed, or something has happened with product taxability, that's happening on a regular basis, and we're keeping that up to date in our cloud service. So your company will set up your logic and what states you're in and what your items are, and we're just going to link into your ERP or your e-com system, and you're going to run transactions. And for example, as you enter a sale or transaction into your ERP, it's going to go up to our service and it's going to say, do you have Nexus in this state? Yes or no. So it's going to look at your settings to see if you have Nexus in that state. Is this customer exempt? Yes or no. It's either going to look at your ERP to see if you have them marked as exempt, or it can link into exemption certificate management, which I'll talk about in a second, to say whether or not that customer is exempt, yes or no. Is this product taxable, yes or no? And if so, at what rate? And it's going to go ahead and return a rate back down to your ERP or e-com or POS system. And it's going to do all of that in about 0.4 of a second. So it's going to just go up there and it's going to read all the logic that we've set up in your system and kind of return that rate back down to you. So as I mentioned on the left, Cert Capture is our exemption certificate management piece. It can work absolutely seamlessly with the AvaTax piece or independent. If you want to just manage exemption certificates. But it does have a way for you to send requests to customers to fill out those exemption certificates. It will validate those certificates. So if your employees don't know how to validate, are those the right number of digits? You know, things like that. It will also track expiration dates of certificates. Some states, they expire in a year, some 3 years, some never. So all of that will be managed, and it can give you reporting letting you know when exemption certificates are expiring so that you can ask for new ones. A couple of things also to note on exemption certificates that I've learned recently. If a company that you're doing business with has recently been acquired, their exemption certificate is no longer valid. If the person who signed that certificate has left the company, no longer valid. You need to get a new one. Those are all things that are very hard to manage, even for us with the system, but they're things to keep in mind when you look at that whole compliance picture of sales tax. The last piece of this is actually the returns and filing. So again, as I mentioned, we have all of that information, all of that data in our system. You can use it on your own to prepare your returns and submit them, but if that becomes too cumbersome and you're doing this in way too many states, we can take care of those returns and filing for you. You can validate the information and approve it. We'll take one ACH sweep out of your account and we'll remit all of those returns for you, so you won't have to. Especially for some of you who maybe with this economic nexus threshold be looking at going into the state of California, that return I believe is about 9 pages long. And it's very, very complicated. So I've looked at it, I've made an attempt at filling it out and I was unsuccessful. So some of those rates in different states can be very, very complicated to get into. So just, you know, a quick highlight on this. I mean, you know, we have over 20,000 customers right now using Avalara. We've been doing business since 2004. We started in the Microsoft space, so I am a longtime Microsoft girl myself. So we have over 20,000 customers, and what they really look at are these 3 things. They want to have the accurate, right rate. They want to be efficient. You know, all of this stuff takes time, managing rates, looking at what's new, you know, in that jurisdiction. And having those integrations to over 600 products are really important to you as a company, because as your business grows and you're adding other softwares into your business to manage the growth that you want to accomplish, we can integrate into those other pieces, whether it's an ERP or a POS system or an e-com system, something like that. We can integrate into that and you'll have one source of the truth. All of that will be looking at that one cloud solution, giving you one source of truth and giving you that accuracy and efficiency that you need. So you've heard me babble quite a bit. I'm going to open it up for questions, but before I do that, before I let Angie get to any questions, again, I'll give you a minute if you want to pop some into the chat. Keep in mind that if you guys want more information, if you need more detailed information, you can contact me. Make sure you Google Avalara and Wayfair, and there's more stuff there, or I can send you links if there's something specific you want to see. All of this stuff is very important, so we're here to help you if you need. So with that, Angie, I'm going to see, are there any questions?
Yes, we do have several. So the first one is, what is the base sales rate for each state, and should we collect them?
So that's a tough question, and the answer is yeah, I don't know. So every state doesn't have a base rate. They're all varied, and should you collect them is really dependent on whether or not you have Nexus in that state. But what I will give you is a little bit of additional piece of information. We've had some customers who have said, listen, I'm not going to deal with all of the rates that are in Colorado, for example. I'm just going to create one tax schedule at the highest tax rate, and I'm going to do that and submit that. And that's actually it's actually not okay. If you collect it and you remit it to the state, that's okay because you're not taking money. If you collect and remit only a portion of it, that's stealing, and you could find yourself in jail. And if you say, I'm going to just collect a base rate, and that you do an audit and you find that the base rate that you've been collecting is too low, the difference is likely going to come out of your pocket unless you're going to find a way to go back to all of your customers and get the difference. So it's not as easy as what's the base rate. It's what is the rate I need to collect for that specific address, and it really varies. And whether or not you should be collecting it really depends on your business. And so that kind of gets down to a Nexus study, but we can certainly take that offline if someone has additional questions, or if I misunderstood that.
Okay, thank you. Next question. What are the implications for a company that is predominantly B2B?
Right, so that really comes down mainly to exemption certificates. So most B2Bs, they're selling for resale, so the people they're selling to are exempt. So it does not mean that you're exempt from an audit, though. An auditor can still come in and say, hey, you've been doing business in my state, and you can say, yep, but it's all exempt sales. Excuse me, and they're going to say, okay, show me your exemption certificates. And that piece of paper, if you cannot produce it, or if it's not valid, or if it's expired, is just like you taking a check for, call it $10,000, $20,000, $30,000 and putting it through a shredder, because that's lost money if you cannot provide that exemption certificate. So that's really the biggest thing. One other thing that's really interesting is some of the states, and I encourage you, that guide that I showed in the middle that talked about all the states and the thresholds, some of the states with their thresholds include exempt sales. So there may be states that say any of your sales into this state that get you to $100,000, you now have Nexus. You have to register, and you can file a $0 return, but you're going to have to do that because according to their thresholds and their rules, it doesn't care if it's exempt or not exempt transactions. So you should be looking at that, because you may still be required to register in those states and then prove with exemption certificates that you don't have to pay the tax.
Okay, thank you. Next question. Can you provide general information on the current status of sales tax?
Again, there might be more to that question. I mean, it's kind of like what we've covered today. I mean, the general state or status of sales tax is really right now that it's very complex. It's constantly changing. This is one of the biggest, most recent changes, this whole idea of economic nexus and this ruling. But put that aside, even before that, companies really, it was always your obligation to be on top of getting those tax notices. I remember when I was a controller, you'd get some piece of mail that might have even looked like garbage from your state, and it would have new tax rates. And then you had to look through this sheet with all of the rates to see which ones of them were different than what you already had in your system, and then make those changes manually in your system. So those things were always in play. States are always trying to figure out what different tax laws they can make, what rates should be, what products should be taxed. Years ago, it used to be that, for example, software as a service was not taxable. Delivering books online were not taxable years ago, but then as people started reading more and more books online and buying less and less hardcovers, the state started saying, well, we want to charge tax on that. So the one thing that you can believe is that it's always going to be changing, and it's always going to be complex. What you believe to be the truth today about sales tax will not be the truth tomorrow, and it maybe isn't even the truth today. So again, I know that's a really generic answer, and if, again, we can go into detail if someone wants to ask more specific questions.
Okay, thank you. Next question. Do I have to change any of my current ERP processes to use Avalara?
No, I mean, in terms of the day-to-day transactions, absolutely not. The day-to-day piece is enter your transaction and go on with your day, and the tax appears once it does that, that 0.4 of a second thing I explained. In the beginning, there's obviously setup, and you'll change your tax details and tax schedules to say AvaTax, but your day-to-day pieces will not change. Your users won't see any impact.
Okay, thank you. And next question. When taxability rules or tax boundaries change, do I need to do anything to update if I use Avalara?
Right. So no, and again, that's part of what our research team is constantly doing. We're constantly getting those changes and rate changes and boundaries and product changes, and we're updating them in our service. So as long as, again, we have your products mapped into our system and you have your Nexus marked, any change to rate or taxability will automatically take place and you won't have to worry about it.
Okay, thank you. And next question, how should remote sellers go about determining whether they have Nexus in South Dakota and other states?
Yeah, so a couple of things I would say about that. There's two things. A Nexus study is highly encouraged. It's going to be tax professionals looking at your business in different ways to see if you have Nexus there. If you want to take a stab at it to begin with, to kind of get an idea of how important it is to you, kind of like I mentioned earlier, is run a report of your sales and sort them by state. An additional, you need to run revenue, like transaction dollars, and transaction volume, because some states have an either or. So you may not hit the revenue threshold or the dollar threshold, but you may hit the transaction threshold. So kind of, if you can run a report or have somebody that can run a report to get that information to kind of see the difference in what you're looking at right now, and you may say, oh, well, it's only the ones that we're in, or you may go, oh my goodness, this is huge. I need to have somebody look at it. So I'd really look at a tax professional to help you with doing a Nexus study.
Okay, great. Thank you. And we do have another question. Blanket resale certificates that include states like Florida, which is only good for 1 calendar year, do we need to receive a new blanket certificate or just for the state of Florida?
Right. So if Florida is only good for a year, that's the only. So as long as that blanket resale certificate is still covering you for other states, you should be just fine. But you will want to get a new one for the state of Florida. So whether or not that customer decides to give you another blanket one, or whether they give you just for Florida, but you will need to have something that covers you for the state of Florida if that's already expired.
Okay, great. Well, if anyone has any further questions, please don't hesitate to get those into the questions box so we can get those answered for you. And like Stacy said, if your questions involve some more in-depth explaining, we can uncover that on a one-on-one call or email you. All right, well, that looks like those are all of our questions that we have for today. Thank you, everyone, for attending. We appreciate your attendance, and we look forward to seeing you on one of our future webinars, which you can find on our website at innovia.com under events. So if you're interested in one of our future webinars, please don't hesitate to register. We do have a couple coming up in the next few weeks. Next week we have e-commerce trends that Dynamics Nav Business Central customers can take advantage of. And Santa will be presenting on that particular webinar. All right. Well, again, thank you everyone for attending, and we look forward to seeing you on one of our future webinars.